Hello, everyone. Welcome back to the Acadium studio. This time we're going to do something a little bit different. We call it Acadium After Hours. This is a little bit more of a relaxed look at Lindsay, Frank, and Tom, and kind of the stuff that we talk about after hours.
Happy hour, right?
Happy hour.
Happy hour.
So, as I said, it's a relaxed look. Part of this is learning from mistakes. So, right, like Warren Buffett says, it's good to learn from your mistakes, but even better to learn from the mistakes of others.
Others, yes.
Yeah.
Less costly.
Yeah. And so today we're going to talk about an investing error that's driven by emotion. And we see it all the time, every year. It's market timing.
Oh, big word.
What do you got?
That's it. We're going to be here for hours, Frank.
It could be. First of all, what is market timing? At the most basic level, what would you say that it, how would you explain it to a client?
Market timing, that's where we basically abandon our long-term plan and we try to tactically time when to be in the markets so that we can ideally avoid the downturns and be there for virtually all of the upside.
Buying high and selling low.
Yeah.
That's
Unfortunately,
really what it boils down to, right?
Not you personally, Tom, our clients.
which, it's funny, but it's sad, right?
Yeah.
It's really the worst thing an investor can do. And there's only, you can only do it so many times before you're...
The data will prove that, yes.
Yeah. When we talk about market timing, I know that it shows up in a lot of different ways. Maybe the most common one is fear and wanting to get out and move to cash. But there's other ways too. Besides fear, I think greed is another thing.
Yeah, they're cousins.
Kind of the same thing.
Yeah.
Do you guys feel that certain investors that you come across over the years are more likely than others to try this? Or is it more likely at certain times?
If you're human, you've thought about it.
Yeah.
It's just whether you have volunteered that with me or not.
Yeah.
So some people are just, they're thinking it but don't share it with us, and they should. But I think if you're not, you're either not paying attention or you're not human. So it's perfectly normal.
And we try to be the gatekeepers, but the three of us are also human, and I think we've made our own fair share of investing errors as well. So that's why we're here today, to learn and broadcast it.
Yeah, and I definitely want to be clear about this, that we are not immune to this ourselves, right? Even as advisors, we're human too. Happens all the time, and we have to resist that temptation. I'll say for myself, it's easier to resist it knowing that I'm a part of a team, right? That I'm accountable to the two of you, and I'm accountable to our clients. I think it's easier to try to do something like this if you feel like you're doing it in private or with your own money, right? And there's no winners or losers but you.
It's psychological too. Every day the market starts off at zero. There's buyers and sellers on both sides, and market prices are fair. But if you see the market go down 6 days in a row, you feel like it's going to go up that next day. If you see it go up 6 days in a row, you feel like it's going to go down. Yeah. So you always feel like the more days in a row, that somehow that next day is much more likely to be an up day or a down day based on the previous trend. It's a fresh day. It's the same as flipping a coin 10 times in a row. If it comes up tails 10 times in a row, it's not more likely to come up heads than 50-50 that 11 times.
Right, still 50%.
But your brain feels like that even as an advisor, and you got to fight that.
And how often have we heard before, I'll get back into the market when things are better?
Yeah.
And the markets have already moved thousands of points.
Right,
So,
when things settle down.
correct. When you're buying, you are buying high at
Yes.
that point because you've missed out. But
Especially now, right? I mean, it's an election year. And this happens every couple of years, right? Pretty predictably. And just as predictably, people get anxious and they want to step to the sidelines, or they want to bench their money for a little bit and wait for things to calm down, right? Whatever that means to them. And they end up really hurting themselves.
Or when Washington figures it out.
Yeah, when Washington, exactly.
I'm 53 years old. Please let me know when in my lifetime that has been the case.
Yeah.
Yeah.
So I just
Not in 53 years, I promise you that.
No, and actually, it's anecdotally, 1946 and 1949 was about the closest we've ever come to peace post-war. Everybody had a job and things were growing, and Everybody was on the same page politically. We liked our president, and market went down roughly 30%. So
That's
go
a great point,
figure.
Lindsay, because everybody tries to connect the dots constantly between investing and the rest of the extraneous things that are going on in the world, and you can't do it.
As we share our stories, the times that we've experienced this with people, I think, we don't want to out anyone. We don't want to embarrass anybody.
Correct.
We've seen embarrassing things happen for sure. We've seen things that I would say are important for new investors, especially, but anyone to learn from, right? From this experience and the spirit of learning from the mistakes of others. But we definitely don't want to be, insensitive to the reality that these are costly mistakes and a lot of times irrevocable mistakes.
Yeah.
You can't go back and not mess up. I guess if there's anybody out there in our audience who occasionally thinks about trying to time the market in some way or, I guess predict what's going to happen and then do something with their portfolios ahead of that, then
Good luck.
But this message is for you. It's for us. It's for advisors and anyone else who might be in the same seat. Lindsay, we were talking about this recently. Anything come to mind?
I was reflecting on it before our get-together, and, one thing that has happened, we all work with, well over 100 families, and every single time there's a down market, there's always that one person, and you never know who it's going to be. And they come in, and they've watched their statement go down. They've heard us educate them and give them facts and coach them through the years, but there's always that one time where there's something in the news or something in their circumstances where markets are down 15, 20% or more, and this is the time that they're convinced that it's not going to come back up again.
Yeah.
And they want to meet.
Yep.
We have a phone call. We come in. It's impassioned. They want me to basically acknowledge that given the circumstances of the world and the economy, it has to go much lower. And we need to cut the losses, and we'll consider getting back in at a much lower price. And almost inevitably, that's the week the market bottoms. And people have to remember, markets bottom on bad news, not good news. So if we're waiting for the good news to happen, it's never going to happen. It's always going to be when people are the most pessimistic. And that one meeting I have, it's always like, okay, I've had that person who's ready to throw in the towel. We're about at the bottom.
Yep.
Nothing scientific about that. I'm certainly not going to invest people's money based on, incidental conversations, but it happens every time. That when that person is ready to throw in the towel, we're hours or days away from bottoms.
Yeah, there are a million technical indicators out there, and that investor sentiment one is
Absolutely
almost something you can rely on.
Absolutely.
It's unfortunate, but true.
And back a couple years ago, we were getting 1%, 2% on CDs. Well, 40% market rally, 2% CD take you a very long time to make up what can happen in a matter of 12 to a year or two.
Yeah.
We can look at the historical data. We can see that most of the best days in the market occur during bad weeks. Most of the best weeks occur during bad years, right? Most of the strongest single returns in market performance occur during bear markets. And that's when it feels like you should be out, right? I mean, because the headlines are negative, things are not great looking out there, but that's the best time to be in. This is something we've talked about too. Like there's always a pull to get out, but never a push to get back in. It's a very asymmetrical emotion.
Again, waiting for the world to turn around and there be peace on earth.
Yeah.
And never going to happen.
And also too, like I found it's not always effective to address someone's emotional fears with a data argument, right? I mean, they're scared, and it's I try to be sensitive to that. Every time I feel fear as well, but sometimes you can counter that. You can counteract that with a data argument, with a chart or a graph, and most of the time you can't.
Well, I think at that point it's more of it's a behavioral conversation than it is a data conversation.
Yeah.
Why are you feeling this way? And maybe it's something that happened in their life decades ago. Maybe their parents grew up during the Depression and they felt what it was like not to dad to have a paycheck
Yep.
You know, it could be a slew of different things, but really that's the root problem is what it is. It's not the data.
Right. Yeah. It's never actually the numbers.
Correct.
It's the feeling.
Yeah.
And it's a disconnect too, because they look at it as numbers on a piece of paper, and they don't realize what they own. And they own businesses that they patronize, their family patronizes, and their friends patronize every day.
Yeah.
So personally, back in 2008, 2009, the great financial crisis, that's where I had my time where I was watching the news, and I'm thinking, this is it.
This could be it, yeah.
This could be that Armageddon that everybody's been talking about.
Yep.
And then after a couple days of, or a couple months of hiding in the bunker, studying for and taking my CFP exam, I started to go out for dinner and things like that.
You told me you were sucking your thumb, though.
Yeah,
you weren't hiding in the bunker.
It's different. So we're talking about
a different time.
Christmas of 2008, and I go out to dinner in downtown West Palm, and there's people going out to dinner. There's actually lines and waits at restaurants, and people are going on vacation, and they're staying in hotels, and they're playing golf. And I go, the world didn't end.
Yeah.
And you turn on the TV, and you would think that no one was actually driving a car because they couldn't afford gas. You know, a lot of people suffered, a lot of people lost homes, but the earth did not stop turning like the TV had told you that it had.
Yeah.
And sure enough, you know, your tire, get a flat tire, you get a new tire. You know, your car breaks down, you get a new car. Air conditioner breaks, you get a new air conditioner. Everything kept going on, and, you know, here we are.
So what you just said is super important for people to never forget. It's that even if the market looks rocky, or even if we're in a bear market, right? It's down 20%, 30%. People still need soap. You know, they're still going to continue to post photos online. They're still going to want to drive and live in a place with air conditioning. And so the companies that they're invested in the fact that people are invested in companies, profit-making companies, successful companies, is something they should never lose sight of. And that happens very readily when they start thinking about the market, right? This like abstract idea. What's the market doing today? What has the market done this year? What's the market going to do? It's going to go up and down.
Yes.
Right? I mean, that's what it does. But underneath that, the companies that you own are going to continue to turn a profit.
And speaking of that, you know, companies may go out of business, but when has the market ever gone out of business? To my recollection, never.
Not
Much
the
more
world,
rarely.
anyways.
Right.
Some markets have,
Some
and that's why
markets,
we
correct.
diversify. Ask people in Russia during Stalin.
That's right.
They'll give you a different answer, but that's why you don't have all your money in one country.
Yeah.
Anything can happen in one country, but if all the world goes out of business, then your phone's not going to work, and you can't call me anyways. So.
And you know, we all
And I
came
can't
up
call
through
you.
coming up through the bank doing investments. The three of us, you know, living through 08, 09. I never forget. The clients were coming in and asking to buy gold.
Yeah.
And I thought, well, is this speculation or Armageddon? And they would go, what do you mean? And I said, well, are we looking to buy gold because the stock market's doing so poorly? Or is this for you to walk around town so you can buy bread and milk with your shotgun in your hand? And they were like, yeah, that's the one. And I go, so it's Armageddon. You think the dollar's no longer going to work and you need gold coins. And I would buy gold for the clients because I could, and they would walk it right into their safety deposit box. And that's how bad it was at that point. And I don't think they ever used that gold once.
Yeah.
Because Publix was open and accepted dollar bills.
It was scary times.
But I understand.
I was personally, I was right there too. And but then, you know, you just have to look at history and go, it's either all going to work or we're all dead.
Yeah.
Yeah.
The 2008 crisis was obviously formative for all of us, a big one. But all this stuff happened again not that long ago during COVID.
Yep.
This existential crisis of the world is never going to be the same, and people are not going to spend money anymore. They're right. The world's never going to be the same. It's never the same from day to day. It's constantly in a state of change. And we invest because of that, not in spite of that. So just wanted to throw that
Yeah, what do
in
they
there.
say? History doesn't repeat itself, but it sure does rhyme.
Something
right?
like that.
Yeah,
Somebody said that.
I think
one
Mark
time.
Twain said
Yeah,
that.
right.
Yeah. If in doubt,
on
it's
him.
Mark Twain or Winston Churchill.
Yeah. Well, I'm a little older, but, you know, so I'll share another one of those bubbles that we were in, which was the 01-02 tech wreck. And I think in the full spirit of this program, I'll pick on myself So I was in the business probably about 8 years at that point. And Lindsay and I worked for the same firm at that time where we did not give advice. And it was pretty much legalized gambling there, internet trading, if you will. And we saw all of the .com companies pretty much go down a lot, if not out of business. So I figured, being smart and being around the business every day, that I could maybe exploit an opportunity right after the financial crisis had happened. And this internet search company went public. And I said, how can that thing last? So I do just the opposite, and I what we call short the stock, meaning I'm going to profit as the stock goes down. So it wasn't long after it went public, and I think for all the viewers on this episode that they might know a company by the name of Google. So smart Tom decides to short Google, and then short it again as it continues to go up to the point where my threshold for pain was no longer, and I lost a substantial amount of money. So, which I now refer to as tuition, because it was a learning experience. Right. And I think it's Socrates that says your awareness of ignorance is the commencement of wisdom. So that's where I learned a lot, that I can't chase fads, and I'm not good enough to exploit opportunities in short-term trade and all of these things that basically we're talking about right now. And it cost me such a valuable lesson that now I know how to communicate to clients and tell them, please don't do this.
Yeah. So, I mean, to be clear, we know how to talk about this because we've done it.
Yes.
We've been there.
Yeah. It's not just that we have CFPs behind our...
Right. We didn't read about it in a textbook, unfortunately.
This is on-the-job training stuff.
Experience is what you get when you didn't get what you wanted.
Oh, okay.
Right?
Very
I think
wise.
I saw that on the wall of a Jimmy John's.
Yeah.
There's a lot of good wisdom there. Mm-hmm. So, as far as our experiences with market timing, obviously we're still collecting those experiences. They're gonna keep going. Yeah. Those clients that want out, and as I mentioned, hardly ever want back in. It's not gonna end. It's gonna keep going, and hopefully this message makes it out there and helps one person. And so that it's a little bit easier to deal with the next time that we're.
That's how you change the world, right? One at a time.
One at a time.
You're not alone.
Yeah,
Everybody's thinking the same thing.
So that's going to do it for this episode of Acadium After Hours. We hope it was entertaining for everyone out there as it was for us. If you want to see more, please feel free to subscribe and share with your friends and family. For now, this is Frank and Lindsay and Tom signing off. Be well. And we'll see you again very soon.
Thank you.
Thank you.